Hey there, it's Lorne Andrews here from Dominion Lending Center's Expert Financial and OptimalFinance.ca. So today we're going to be talking about getting a mortgage when you have bad credit. Is it possible? Well, yes, it's possible. We're going to kind of show you some ways that can happen. Now, it's obviously if your credit score is good, it's a lot easier to get a mortgage. But you can, it doesn't necessarily mean that home ownership is out of reach if you have bruised credit. So I'm going to give you 5 ways to qualify for a mortgage right now. So the first step is, one, you need to start working on raising that credit score, okay? Now, the first step is to make sure that you understand what your reports are from Equifax and TransUnion. Now, I will give you a heads up that when you order the online ones, they might not have the layers that the ones that us lenders use. So I would always recommend that you connect with obviously your professional that's actually taking care of you and review the credit score with them. Now, if you see what your credit scores range from 300 to 900, okay? And if your credit score is say above 600 to 650, 680 is a great mark. You shouldn't have any trouble getting an affordable mortgage depending on if there's anything else in the background too. But if your credit score is less than that, it will take steps to raise it. One of the things that you want to do is make sure that all your payments are on time. You want to keep those consistent. The next thing you want to also do is make sure that you look at what your credit card balances are relative to the limits, okay? And you want to try and keep them below 50% of that credit limit. I have situations where people have a low credit score because their balances were very close to the limits. Credit card company would call them and say, hey, it looks like you need more credit. Can we raise your credit limit? And you say, yes, please, to raise the credit limit. All of a sudden the credit score jumps up because you've increased the gap between what the balance is, okay, and what the limit is, okay? So keeping those, the credit balances, again, I don't like to see them above 50%. Some people say 60%, that type of thing, of whatever the limits are. The other thing you got to look for in that credit report, especially the detailed ones that we get, is mistakes. Because there could be something that was paid off years ago as not showing as a discharge. Maybe there's a prior bankruptcy, that there's certain things that were included in the bankruptcy that didn't get reported properly on that actual credit score. So those are the things that we look at and say, okay, you know what, these need to be fixed. So when we go through it, there's 2 processes. You can actually request this and request these to be fixed with TransUnion and Equifax. When we do it on our side, we can actually usually get it done within about 48 hours. So it's pretty quick when we do it. And all we would need is just a backup of what needs to be fixed. And then we write out a report, we send it in to them, and they usually fix it really, really quickly. The other thing too is, so the third step is when we're trying to get into a mortgage, we're going to back to here now, we can shop for low credit score mortgage, okay? So a low credit score mortgage. So it basically means that these lenders will accept lower credits. They will charge a higher interest rate and usually a lender fee on top of it, okay? Because there's an increased risk. So that said, but it still allows us to get into a home. When we take these particular mortgages, we usually go with shorter terms, so 1 year, 2 year, maybe 3 years, because what we're trying to do is now work during that time to fix any other issues to get you over to a regular lender. Number 4, you have to save for a larger down payment. Some of these solutions that we're talking about would require a 20% down payment as a minimum. So we want to make sure that we want to focus on that down payment. And number 5, maybe accept more modest home. Okay, so maybe you're not going to be jumping into that mansion that you want to get or that dream home first, but you're going to use your home as a stepping stone to get in there. So a lower price home would make it more tangible in terms of the amount of time you need to save for that down payment. And makes approval much more likely. So there you have it. There's 5 ways to improve your chances getting a mortgage even if you have bad credit. Please reach out and ask us any questions you might have. We're here to help. We look forward to helping you.